Welcome to the Snapshot edition of the Daily Update. This is being prepared Tuesday, April 5th, where I'll briefly go over the action in the markets and then see how things look for Wednesday, April 6th. And it was a pretty negative day. In yesterday's video, I pointed out that things were looking a little more negative. We weren't seeing real broad-based strength. Some of our indicators were weakening. Well, on Tuesday, we saw a pretty substantial decline, and we ended up having a down day, and things have turned a lot more negative. It seemed like a lot of the love that we saw on Monday for tech stocks, well, that didn't last very long. And on Tuesday, a lot of what was gained on Monday was given back. So just to go over what happened, we saw a flat to lower open, and then we saw selling go down to S1. And then we spent some time bouncing between S1 and S2 as we saw more declines. But then finally, prices fell below even S2. We closed near the low for the session. We were down 1.26% overall. And one thing, again, that seems to be the norm right now is that we're seeing volume below average. So our technicals are weakening. There's some of them are still positive. We could still recover from this. But if we see more downside from here, everything just might switch over to looking more negative. Of course, one of the stories was inflation. We had the non-manufacturing ISM come out, and that was not quite as strong as expected, but there's the prices paid index, and that was very high. And that kind of spooked the markets. That combined with some Fed officials giving some speeches around, and then taken together, that really shot interest rates higher. And so the one scenario about rising interest rates impacting stocks, that's the scenario that pretty much played out on Tuesday. Of course, all the geopolitical concerns, Russia, Ukraine, the lockdowns in China, different oil things that we've been talking about with releasing the reserves, and that might lower prices, but what's that going to do more long term? And then we still have a lot of inverted yield curves where some of our curves are inverted, other curves are actually advancing. And so there's just a lot of different things going on right now. So what are some comments? The technicals are weakening. They're still positive, but weakening. The interest rates that we saw really rising on Tuesday, and as well as the Fed speak, that spooked the markets, and the tech love that we saw on Monday was gone on Tuesday. We're in a very short-term range now. And another thing that I'm seeing with the charts is that small and mid caps, when we have a down day, they're going down pretty strong. But on Monday, when we had an up day, they didn't really do much. So that could be a little more into the negative scenario. The S&P did drop back below its 100-day simple moving average. And then the other indexes like the NYSE and the Wilshire, they had been above their 200-day moving average. Well, they dropped below that now. And then the VIX, which measures fear, that had dropped below 20, which means we're more into the not really freaked out phase. Well, it went back above 20 now. Anytime we see a decline, you typically will see the VIX advance. And then here's the economic report that I talked about, showing that the prices paid component was very high. The current market valuation is still fairly valued overall, and that pretty much won't change now because I went over that in yesterday's video. That'll stay pretty much the same until they readjust the charts over the weekend. Our trend is positive, but weakening. And that's one of the other scenarios that might be coming more into play. Our bias is negative because we had a down day. And then I've switched the momentum over to negative because overall, since last Thursday, even with Monday's advance, we're pretty much negative overall right now. Here's the daily chart showing that the gains that we picked up on Monday, we gave that back, and we even started to go back into Friday's session. We have these pink areas right here. This is the short-term range that I'm talking about. Are we going to be able to bounce back up and then we have resistance above where we're at? Or are we going to break down below and start heading towards this pivot level? That's kind of where what we're faced with right now. And then you can see that volume did increase on Tuesday, but is still below average overall. Here's the ADX. The buying power is decreasing, the selling pressure is increasing, and the ADX overall continues to decline, and we're getting down to close to this 20 level, which in my opinion, that's when we have a line in the sand between a trending and a non-trending environment. Here's our moving average spaghetti tree where we dropped back below the 100-day moving average. Now, other indexes drop below their 200-day moving average. So both of those together can be taken as somewhat negative. If we see continued selling, are we going to get some support from some of these moving averages, or are we just going to blow right through them? Here's our moving average rainbow. Again, shows now that we could be falling back into the rainbow unless we see some kind of a rebound on Wednesday. On a long-term basis, we're still positive, even with the declines that we've seen over the last few days. And I'm kind of throwing Monday out a little bit. That seemed to be like a one-day wonder. The Elon Musk news, and apparently now he's going to be appointed to the board at Twitter. With him pumping up Twitter stock, and tech stocks saw some real positive action on Monday. That's gone now. But longer term, we are still above our 200-day moving average. So what's our outlook for Wednesday? The technicals are weakening. The follow-through buying that we needed to see, that didn't happen. We saw selling. The markets are still in this intermediate term range, and we're even in a real short-term range right now. We're still battling between growth and value. The yield curve is still freaking people out. We have oil that's causing a lot of problems on a personal level and as well as an economic level. And then the supply chain issues, that's being attributed to a lot of the rise in prices, especially what we saw in the prices paid component in the economic report. Now, on Wednesday, we have the FOMC minutes being released at about 2 p.m. Eastern. And people will read through that. They'll try to read some secret meaning into it. They'll see how different people on the committee voted. And that could shake up the markets. It could send them positive, but it could also send them lower, or they might say, this is old news. We've heard a lot of information since then, and we're not really going to pay attention to that. And then all the different geopolitical events that I keep talking about daily and that I've already mentioned. So what are our scenarios? How could we go down from here? Scenario A looks like it's pretty much over. We have pretty much worn off that short-term overbought after having that nice run up and hitting upper resistance. That's pretty much gone now. So that's really off the table. Scenario B is what played out on Tuesday, rising interest rates. And then of course you can throw yield curve concerns into that as well, because we're seeing some real economic concerns. We're seeing a real rising interest rate environment. And then C, this is what I thought we were going to have for Tuesday. The internals and broader market areas, they're not showing strength. Well, that ended up playing out on Tuesday, but the interest rates kind of came in and took over. In fact, we're seeing selling as far as the internals and broader market measures that we look at. Okay, what's the scenario for the market going up from here? We still have that strength that we've been hitting after that intermediate term low. Is that still in the picture right now? We might be far enough removed from that and seeing some sideways action to where that's becoming less and less relevant, but it's still there. Our oscillators continue to be positive, but they are weakening. And the moving averages, if we fall, some of them, will they provide support? Or if we go higher, will they be providing some kind of resistance? And then scenario 3, which again is looking a little more likely, where we're in this intermediate range where we've been seeing wild swings, and this has been preventing a trendless condition, but we're chopping around right now. So the ADX is weakening. And again, if we drop below 20, that would be more of an official trendless, choppy, sideways market, where we see a slowdown in price movement, which pretty much doesn't signal any kind of a trend. Okay, so what's our conclusion then? The S&P is positive, but showing some short-term weakness. Is that going to follow through? Are we going to see more selling on Wednesday? Or are we going to be able to see a bounce? Or are we going to chop sideways? Short term, we are positive but weakening. We're really lacking any kind of broad-based strength. One day for the techs and growth stocks, that was not enough to really change things around. Intermediate term, we're still positive, but our oscillators are weakening. And then the moving average, if we're falling, hopefully they will provide support. If we're going up, they may provide resistance. Long term, though, we are still positive because we're above the 200-day simple moving average. And then here, since I have new people watching the videos all the time, I just want to list some of the videos that I make available, but the ones with the asterisks are what I intend to post when I get a chance to do that. So thank you. Have a very good Wednesday, and I'll do another snapshot update after Wednesday's session.